Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Thursday, June 6th, 5:09 p.m. Eastern Time. Coming to you from St. Augustine Beach, Florida, with the Revere Roundup Daily Market Insight video. Market state, we're in an uptrend for a month now. Check the trend gauge over here. We've got the green arrow on leaders, some coming under pressure over the last week, particularly in what was a leading group, AI data center hardware. We'll talk about that as the video progresses. Then we track the five major indexes across three time frames to determine our allocation to the market. You can see we've got three green arrows there as well, but some fine print. We focus primarily on the S&P 500 and the NASDAQ 100, and they are holding up strong as can be. But we've got the Dow mid caps and small caps below the 21-day moving average, and we've got the Dow and mid caps below the medium term 50-day moving average. All five of the indexes are above the 200-day moving average. That's the long-term indicator, and we give the market the benefit of the doubt on from a broad index perspective, as long as we hold above that level, because we're no chance of a bear market as long as we're above that level. It's when we break that level that we really have to start paying attention to what's going on overall with the market to protect capital that was made in uptrends. That's what we do at Revere. Grow capital during uptrends, protect it during downtrends. So what happened today? After 4 nice days up, including a breakout yesterday by the S&P and NASDAQ 100 to new all-time highs, we had a tight range consolidation day, not unexpected after 4 days up. Here are the final numbers. The 21 over 21 list. Leaders, some of them hit today, down an average of 1.05%, 8 up, 13 down. We're going to talk about two that we got stopped at, actually one that we stopped out on a partial and two that we stopped out completely. And I'm going to show you what was kind of a red flag yesterday and today for the potential breakdown. Big eight, 4 up, 4 down, up an average of 0.28%, led by Amazon. Haven't said that in a while. The RG8, this is our 8 growth ETF composite, 1 up, 7 down. The one that was up was ARK, and primarily because Tesla was up 1.7% today. On average, RG8 down 0.4%. S&P 500 open nearly flat, closed nearly flat. Tight range, not a whole lot to write home about today. Equal weight, however, down 0.2%. NASDAQ 100, another case of opening near flat, closing near flat. Same thing with the equal weight NASDAQ 100. Dow on top today by 0.2%. Mid caps down 0.3. Russell 2000 small caps down 0.7. Global diversified 60/40 stock and bond. This is 60% ACWI, 40% BNDW. Positive today by 0.06%. Not a whole lot of volatility in bonds today either. Our flagship portfolio, GROTECTION. I talked about some of the hits we took today. We'll take a look at those momentarily. It's part of investing, especially when you traffic in growth stocks. We talk all the time about doing a combination of going for the bigger gain versus a lot hit and run trades versus trying to sit versus we just hate giving back profits. Where we sell strength into things when they're extended sometimes. Don't have a problem taking a loss when something we buy right out of the blue or right out of the gate shows immediate weakness. That's just part of the game. But the ones that had some decent gains and then pull back harshly, those are the ones that that's kind of like looking for the holy grail, always trying to balance the gains versus the pullbacks, especially when the pullbacks are harsh. So let's get into the inter-asset correlation chart section here. You can see after 4 days up, S&P 500 tight range near the top of yesterday's close. Really nothing earth-shattering to talk about here. Well, let me go back to that, and I will talk about one thing that we want to watch for in a 30-minute chart, and that was this. Where should we look for a pullback? What level should we expect to hold? And I'm focusing on this short-term 53.25 level where we had a failed breakout on the 23rd, finally got above it on the 5th, stayed above it today. So this 53.25 level is something that I'm focused on any pullback. Any a pullback to that pivot would be completely normal, and that's basically only about a 0.5% below where we are today. I want to see the 8 and the 21 come up to that level. The 8-day is at 53.10, the 21 at 52.68. So 8-day coming up on that level quickly. Let's go to the NASDAQ 100, very similar chart, tight range consolidation at near yesterday's highs. Dow Jones Industrial Average, still some relative strength today, still in a downtrend on a relative basis, but reclaiming the 50-day moving average today and closing right on the declining 21-day moving average. You can see this has been a 900-point bounce off this 38,000 level now, but as strong as that bounce has been, if you look at the comparable relative strength line, it's lower than where the bounce started. Don't ever look at a chart without looking at an accompanying relative strength line, because that really tells you the whole story. Let's go to the S&P 400 mid cap. Ran into the slightly declining 50-day moving average today, so still below that level, as well as the declining 21-day. Also, serious relative weakness going on there. The Russell 2000 checked by the declining 21-day moving average, still above the flat 50-day moving average, but also a lack of relative strength there, and just kind of really playing ping pong between those two levels. Very critical that this holds the lows of 2 sessions ago, which is just below the lows of the prior week, which is right near the lows of this gap up in early May that had a short-lived rally before rolling over. All right, so those are the 5 major. Well, let's take a look very quickly at equal weight S&P 500. Tight range today, sitting right on the 21-day moving average, above the 50-day moving average, and equal weight NASDAQ 100 tight range today as well, above all the moving averages. Note equal weight NASDAQ 100 relative weakness, as it's been the big cap NASDAQ stocks that have been leading the market. Same situation here with the equal weight S&P 500 relative weakness there. All right, on to the VIX. VIX making lower lows today, sort of on the tight range side with a 12 handle. The US dollar. The dollar was down today, 3 closes below the 200-day moving average, kind of near the low of this range here. Watching for a possible bounce on the dollar at this 104 support level. Gold and silver stocks with a nice bounce today. Here's gold up 0.74%. So for now, this is just it's a breakout of about a 2-week consolidation here. One undercut and reclaim of the 50-day. Looks like a failed breakdown there, and now headed back to the upside. Gold stocks, nice bounce off the 50-day moving average as well, with a very nice day today, up 3.5%. Silver trying to bounce back. It must have heard how I talked about how both of these gaps were given up the last 2 days. Well, it's back in to this range after a stint below the 21-day moving average. It has now reclaimed it. And Bitcoin down, tight range, a little bit of a flag here. Right above the 8-day moving average, you can see this all-time high breakout at the 42 level here that roughly is equivalent to 73,000 on Bitcoin. On the bonds, tight range here, also basically flat is the broad bond index. TLT, the long bond, just down a bit. So you'll see TYX down just a bit. Remember, this closes at 3 o'clock, so a little bit of gyration there between 3 and 4. And the TNX also down slightly today. So 5-6 days down for yields here, kind of due for a bounce. We've undercut this level from 2 weeks ago, so a bounce would be normal there. All right, that's our inter-asset correlation. Let's get to the tail of the tape and then to some individual charts. A couple of news items. ECB lowered rates, first time since 2019. This morning before the open didn't really impact our markets much. Jobless claims before the market higher than expected. Again, that's anti-inflationary. Weaker job market holds back salaries. The market likes that as strong employment leads to inflation. And then tomorrow morning, we've got the government non-farm payroll report at 8:30 a.m. And that has the potential to be a market mover. So 1 day consolidation after 4 days up, tight range all day today. As far as individual sectors go, revenge of commodities today, gold and silver stocks, uranium, oils, copper had a decent day as well. And XLY, consumer discretionary, which is Tesla and Amazon lead that. And both were up today. Bond yields and prices tight. To the downside, solar, semiconductors, banks, industrials, and utilities. The portfolio continued selling in VRT and CEG led us to get completely stopped out of our position. Kava, a 6 million share insider sell. We took profits on a partial of that position, and we added app to the portfolio, attempted breakout early, and then reversed. We'll take a look at these charts in a minute, but the bottom line on the day, all day tight consolidation after 4 up days. Markets do one of three things, either trend higher, trend lower, or trade sideways in a tight range in anticipation of either a trend higher or a trend lower. And after 4 straight up days, really is time for some consolidation. So not a surprise there. All right, what did we get stopped out on? VRT started to sell off last week with the poorly received Dell earnings report. This was Thursday after the close. You can see this, the gap down in Dell, and this is when the weakness started. Dell's holding the 50-day moving average, but this trickled through to a lot of these hardware-related AI data center names. So you can see the move down there for VRT, bounced once at the 50-day moving average. We trimmed some in this break of the 21. This bounce at the 50 is where it should have happened. However, always have to watch after a bounce at the 50-day what happens when you run into the declining 21-day, and that's right where it acted as a brick wall yesterday, and then follow-up weakness today. We got stopped out of the rest of our position for a gain. CEG, basically very similar action. Weakness last Thursday, bounced at the 50-day the way it should have. But when that happens, you want to see it reclaim the 21 as soon as possible. And the downtrending 21-day moving average, again, a brick wall there, headed lower. We'd undercut and reclaim the 50 again, but we wrapped up our profit on that as well. And kind of disappointing after this was a very clear leader. Some debate in how should we take in some profits quicker on this, but disappointing is the bottom line, and I hate giving gains back. Let's move to Kava. Nothing you can do about an insider wanting to sell a bunch of shares, 6 million shares in this case. So that was down on above average volume. We locked in a nice gain on our pyramid buy on this. We're still 40% up on the initial buy on this, which occurred back here on this perfect entry. Connor and Ted, hat tip to them on this one, on this break of the downtrend line. Big candle buying day. Great low risk entry there after a nice tight consolidation level right around the 60 area and the 50-day moving average. Those guys have done a nice job on this one. Survived the shakeout on earnings below the 21-day moving average, but time to just wrap some things up today, and that's what we did. What else today? Let's take a look at the up and down in the portfolio. I mentioned GDX, Coinbase. up 2.3%. We started a position in this yesterday. CCJ uranium regaining some relative strength. Abercrombie and Fitch bouncing at the 8-day. FCX, another commodity stock, regaining the 50, but still below the declining 21, and Pure Storage bouncing off the 21 and making a higher high. Let's flip to what was down on the day in the 21 over 21 list. We showed Vert, Kava, and CEG. Unfortunate when you own all three of those. Micron also pulling back, but this was a more normal pullback. This is what we wanted to see at a CEG and VRT, and we didn't get it. So there's the pullback, along with that Dell earnings report last Thursday after the close. Bounced at the 50-day moving average and regained the 21-day moving average right away last week. Pulled back again, tested it, and made a higher high. This is what we would have wanted to see CEG and VRT do, but no such luck. They ran into the 21-day moving average, which had rolled over, and that's it. We said goodbye to them. So it is what it is. It's part of the game. Let's see what else was down today. HWM continues to be tight. Spotify pulling back on, this is nice volume pattern here after the breakout, after they raised prices. 2 days of declining volume pullback right to that 319-ish pivot. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. Our flagship portfolio named GROTECTION. It's designed to grow assets during uptrends, protect them during downtrends. We monitor the indexes and leading stocks versus various moving averages. And they get weak, we take exposure off. They get strong, we add exposure if they bounce at support levels, such as the 100-day moving average here on the pullback in April. Good spot to start reloading some of the exposure that was taken off when those averages were lost. In this case, it was a gap above the 21-day moving average and then follow through above the 50-day moving average that kicked off our re-entry into the market. We had a little shake last week, but we had 3 days of AM morning weakness and PM strength, and then a breakout yesterday and a tight range today. And the bulls are in charge until something changes here. Understand it's being led by the big 8 and tech names, but that's the market you're getting. You can either argue with it or take advantage of it. And with that, I'll wrap it up for Thursday, June 6th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.